Broadcast is now starting. All attendees are in listen-only mode.
Can you guys hear me and see my screen? I'm having a. Can you hear me okay? I'm having some audio issues. All right, I'm glad you can hear me. I'll go ahead and just talk then if everybody can hear me, even though my headset seems to be off. Okay, let's go ahead and get started. Sorry for the delay, but something popped up for Mike G. So looking at the larger degree chart, as we often do when we start, we have a really nice move off of our ABC consolidation for our larger intermediate degree wave 4. We're looking for a 5-wave move up for the parentheses wave 5. That will complete a larger primary degree wave 5 off of the March 2020 low. And I'm going to go to my, what did I name that? Oh, hold on. Let's open up the really, really macro chart. A lot of times charts of mine, I start to add more details and they get a little bit messy, so then I switch to a new one. So the names of the tabs are not always indicative of what they are. So sometimes, like on the ES chart, it says nano counts, but that's pretty much just what I use as my primary tab, even though I use it for smaller degree micro counts as well. So here I made a new tab the other day where I copied my larger degree. Actually, I think I just renamed, where I have larger degree data going all the way back. My data actually goes only back to 1950, but Garrett and I filled in at the larger degree from actual price data on charts. It goes all the way back to a 1932 low for the larger grand super cycle wave 1 and wave 2, a super cycle degree wave 1 and a wave 2 into the 1949 low. From there, we had I'll go to the 2-week chart view. So you can see from 1949 all the way up until 2000, we have the super cycle wave 3. And then since the 2009 low, it is possible, based on the size, that instead of this being primary 1, 2, 3, 4, 5, that this is a cycle 1, 2, 3, 4, 5, completing off of 2009. And all of that is completing the parentheses capital Roman numeral 5, which is the super cycle wave 5. And that potentially is completing the red large Roman numeral circle grand supercycle wave 3. Now I have this green cycle 1, 2 here. And again, we've kind of talked about this before in some threads. As far as I'm concerned, it really doesn't matter. It's more academic at this point to decide whether or not we're getting the larger red circle wave 4 or we're just starting with the cycle wave 2. Both of those should be a pretty sizable drop from the completion of the next high, ideally in the 5,500 plus region. So I think that if you're prepared for a pretty decent drawdown in the market and have taken most of your gains off the table and have followed some of Avi's advice for making sure that things are more safe and secure, that you don't need to do the beans, bullets, bullion, beer in a bunker, quite yet. If we clearly get, the initial drawdown into that possible start of that support region, and then clearly only get a corrective move up from there, that's when we really should start making, in my view, where we should start making larger things, not just portfolio related, but larger adjustments to you know, how we fit into society and what we plan to do to keep our assets and family safe. When bigger moves down can start to happen that might have larger socioeconomic fallout. So anyway, that's that on that issue. But I did want to point out that that whether we're looking at this as a larger green cycle, wave one and wave two, and a much more extended version of this super cycle third that could push this red circle wave three further out up into the right for 2 or 3 more decades. It's still, we're looking at, to just the normal fib support region is a 57% drawdown, getting down to 67% or even 75%, still within a normal target box of fibs based on topping in our fifth wave up from 2009 lows into that 5,500 to 6,000 region. We do have to allow for more potential extension, even though our consolidation here dropped deeper where it is more prudent to count it as the intermediate degree wave four. There are still counts that we've looked at, or charts that we've looked at, like the RSP chart or the NYSE chart, where you can more easily argue that this is still just the minor degree wave four of a parentheses wave three, and then we get another fourth and a fifth wave after that, or like we've looked at on the Dow, where it should be just a fourth wave of three, and then get another 4 and 5 after that as well. So because we do have so many charts that allow for counting that way, we do have to be on the lookout for, at least even if we are in the final fifth wave, that these fifths of the fifth of that fifth could end up getting more extension and dragging on, while giving other things an opportunity to top. So now that we've given you that big larger bird's eye view, I would like to zoom in on this part of the structure of what we're still working on, getting 5 waves up for just the minor degree wave 1 in what we know should be a 5-wave move up for that parentheses wave 5. So if everybody has that part down and is ready to move on, then we'll jump to a smaller degree and look at those. We'll get to natural gas and other things after we talk about the market charts. So hopefully you guys can see, if we dropped all the way down from a daily chart here, where we're looking at the abstract, or like the larger degree of the 1, 2, 3, 4, 5 structure inside of that parentheses wave 5, when we zoom in and go to that 15-minute tab, we're just looking at the price action off of the June low into what we expect to be the resistance region for the wave 1 top. So hopefully when I click on this tab, everybody can see that we've gone down to the parentheses wave 4 low here in June, and we have these smaller degrees visible inside of that wave 1. So the initial move off the low was only 3 waves up. 3 waves up doesn't mean that it can't be bullish. It just means that if you start with 3 waves, it means that you're looking for a diagonal structure, where that can be 3 waves up for wave 1. We got a wide retrace to a 764 as an ABC for wave 2. And that means that all of the other subwaves should also be ABC moves. So that's what we can see filling out here as A, B, C up as the blue subwaves. A lot of times for my diagonals, I'll use blue as color coding, not because it's an alternate count, but to emphasize the structure so that you see blue and you automatically are associating that with a diagonal. And diagonals have some different characteristics from regular impulsive normal wave structure in a bullish move, or diagonals can go in any direction. And a lot of times people associate them more with a lot of chop, because you're dealing with 3-wave structures for all 5 subwaves. So wave 1 is an ABC, wave 2 is an ABC, wave 3 is an ABC, wave 4 is an ABC, and wave 5, I'll go ahead and add that in here, will also be a parentheses lowercase ABC move like this. And we also know that, so not only do you have those subwaves that are ABCs, but also most of the time your A wave is itself going to be an ABC move. So that corrective nature, where even the moves in the right direction are corrective, can be very frustrating to a lot of people. But when you do have the count right, there's a lot of very nice ebb and flow price action that can be phenomenal for shorter term traders. Or if you just say, I know the structure is going to be choppy, but we're giving it the benefit of the doubt that it's going to move up into our target region of the 4,300 zone for resistance for wave one, and I'm just going to kind of set it and forget it and give it time to prove itself, as long as it holds on to those June lows. So those are the two main approaches to dealing with structure, where you get that initial indication right away with that first ABC move up off the low that you're dealing with a diagonal structure. So within this diagonal structure, we are hitting the 1382 extension of our third wave, which is a very normal fib, not just for a diagonal, but just a very normal fib resistance in general. In the subwave structure inside of that third, we have a nice ABC move up for the parentheses A, and we can count 1, 2, 3, 4, 5 waves up, trying to complete the C wave. Now, a lot of times we look for 100% extension as a kind of a norm for the C wave, but also a smaller degree is going to get trumped by a larger degree. So when you're hitting an exact 1382 fib extension for the third, I would see that as stronger resistance than relying on this getting another extension to get all the way up here to 4216, which is the 100% fib for this smaller degree parentheses C wave. So hopefully that makes sense. 764 that we've already hit is perfectly sufficient, particularly when you have enough subwaves to complete it, and when you're hitting a larger degree fib resistance. So now we also know that the fourth wave in a diagonal allows for overlap. It's one of the only patterns where the wave 4 can come into the price territory of wave 1, but it does not have to. Oftentimes it's going to get kind of close, and we usually look for a deeper than just a 382 retrace, which is our ideal zone for a normal fourth wave. Usually looking for about a 50% retrace as a little bit deeper for the wave 4 of a diagonal. But in somewhere in, we'll look for other things, such as you have the 50-day moving average here, you have the middle Bollinger Band. So there's a lot of things that we can look for a tangle of support, and we just want to see that nice ABC structure somewhere into the 3990 to 3930s if we are topping at 4165 very soon, or somewhere in that region in the next day or so. Then our fib support for wave 4 is not going to change very much. Then it's not going to be as reliable as a move up for the fifth wave as we had here for a third or the C wave of the third. But any clear ABC consolidation would be a very good opportunity to play long for one more high, which should be that ABC move up into resistance. And then we'll be looking, once we get that, we'll be looking for a larger ABC consolidation, 1 degree larger than the fourth that we're looking for right now, into our normal fib support zone for that wave 2. And then once we get this, and then some little structure off of that low, that is going to be a very, very high probability opportunity to go long in a much bigger way, because that will be the first 5 up and 3 down, confirming this is a more significant bottom and a move to new all-time highs. Takano asks, what would you be looking in the next drawdown for your 4 as evidence of an alternative bearish count? The way that I'm approaching this, I try to avoid lots of alternate counts because I think it just confuses things. So it's important to know where key levels of support are and where key levels of resistance are, and that yes, there could be alternative counts, but I think, for the structure that we have off of the low so far and the confirmation that we're getting in stock waves from other individual names and sectors, and certainly key names within those sectors, of this being a similar structure that we're seeing everywhere, and it is very clean in terms of the 3 waves up for the A wave, 5 waves up for the C wave, a wide flat, 3 waves up for an A wave, 5 waves up for a C wave into normal fib resistance, I think, the better way to approach this is, play to support, which is a drawdown of, maybe around 5%. The 4.2 to 5.5 is the ideal in terms of the magnitude of that fourth wave. So, if you're going to short for this move as hedges or because you want to play this as a directional move, it just as a bigger magnitude corrective bounce, this does not look complete. It doesn't look like an A, B, and a C wave completing. The only way to count it that way, because we have this clear ABC structure, you'd have to rely on this being a WX and then an ABC for a Y wave. And just the way that it's acting and the fibs that it's hitting and the other indications that we're seeing is that this is not a corrective bounce that is going to drop down and be long-term bearish from here. But we are looking for a pretty significant drawdown. We're at some pretty significant fib resistance, and we've had some really nice movement off the low. Let's see, this is up 14.5%. So not a bad time to trim a little bit and hedge a little bit and take some gains off the table. Look for that nice ABC to set up for your next scalp, and at least lock in and set your stops, somewhere in a reasonable region. For if you want to try and see this through to hold the fourth wave and stay in, then you want to at least give that down to the 3880s, if not a little bit more room than that. Even though that is deeper than ideal, that would certainly still be valid for the fourth wave. NASDAQ, I think, is almost identical, so it's not worth spending that much time on it. But where's there you go, big macro clean. So similar structure. This is a 1 hour chart. For some reason, it fits a little bit better on a 1 hour. Oh, because it has all the overnight action. So I can fit the same price pattern off of the June lows on a cash only regular trading hours SPX chart on a 15-minute. But to get the same view, we need to do a 1 hour on the NASDAQ futures. But again, just a little bit past the 1382 for the third, got closer to its 100% extension for the fifth wave of that C, due for a similar fourth wave as well, which should be a nice ABC consolidation. And again, we know that most A waves tend to be ABCs themselves. So the first move down might be an ABC move for this A and a B wave bounce. Then that gives you a higher probability opportunity to directionally short. But there are good ways of playing for a drawdown. I've sold some SPX call spreads that give me some time for that to draw down and suck some premium out of that. Then wanted to look at the Dow. Oops. Maybe. There we go. So as we were saying with the Dow, this can be the fourth of 1 degree smaller, still inside the third of our primary wave 5. So the next move up, the 5 waves up in line with what we were looking at on the S&P and the NASDAQ, might be just this minor degree wave 5 of the parentheses 3 and get another fourth and a fifth wave after that. Because the NASDAQ and the S&P would look much more like this was a significant top, I would not rely even on the Dow names to hold the fourth wave. I would still be looking to trim significantly into that resistance, probably even taking a lot of risk off the table as we get closer to a top of the third, and then scalping for that fifth wave long again, and then waiting to see if we get a clear ABC retrace again, similar to this structure, for that larger intermediate degree wave 4 to play some of those Dow names for a fifth wave that might at that point only want kind of a nominal higher high, when the rest of the SPX and NASDAQ might be only getting a corrective bounce to a divergent lower high from whatever they hit here. And then looking at the Russell, I'm really not so dead set on this making a higher high. I think there's a more significant risk that the Russell topped in its primary wave 5. But there is a more bullish option that should be considered. But I personally am not going to be playing this in the Russell itself. I'm going to be playing it based on individual stock waves names that support this larger potential 1-2 of a much more extended primary degree wave 5 that would be filling out as a diagonal. So this should be an A, B, C move up if it is going to be the third of a much more extended primary wave 5. So that could fit somewhere in line with kind of a splitting the difference between the Dow and the other things that look like a more significant top. But I think more prudent would be just to look for an ABC to one more high as this parentheses fifth wave, but not even relying on that so heavily, particularly if we get an A, B, C move up for this A wave. That is going to be a pretty significant risk moment there. And I would probably take a lot off the table in direct, pure small cap exposure, whether it's IWM or Russell, or depending on what a lot of those individual names are doing, and look for that to hold a clear corrective retrace before loading up the boat again on anything that is much higher beta for that potential. All right. Yeah, Callie asked if I have a long-term chart on the Nasdaq, similar to what we were looking at on the S&P. I do. I have that alt where this might have already been the top of a cycle degree wave 3. The main difference between, so I don't have all of the data on the Nasdaq that the S&P has, but the Nasdaq held a higher low in 2008. So the Nasdaq got hit much, much harder from 2000 down to 2002 and got 5 waves up instead of the slight higher high that the S&P got that looks like only 3 waves up. The S&P looks like a wider flat from 2000. That's how we're counting it. So it's that super cycle wave 4 as in cycle A, B, and a C wave down. The Nasdaq did not get hit nearly as hard relative to what it experienced in 2000 to 2002, and actually held a higher low in November of 2008 that counts well as a cycle degree wave 1 and wave 2 in the Nasdaq itself. So we are working on the primary wave 5, the same 1, 2, 3, 4, and primary wave 5 off of the 2009 or 2008 low in the Nasdaq's case, ideally looking for one more high. But in the Nasdaq, that is completing a cycle degree wave 3, and it would still have another cycle 4 and cycle 5 to go after that. See how far over at, there we go. There's my cycle 5. There is a risk, as we said, because this dropped so much deeper, relative speaking to the S&P, and you can more easily squeeze in 5 waves up to here, that this was all of the cycle wave 5, wave 3. But even if we are in the larger 4th already, we should be getting a much higher B wave. And off of this low, again, like we were looking at on the chart here, the 1 hour, we have that same smaller degree structure that we're following in the S&P, and argues for this getting a 4th and a 5th wave as the diagonal, but maybe that is this yellow A wave of the larger corrective bounce. All right, that one more thing I wanted to look at. I mentioned RSP, and we've looked at that in other in the other webinars that I've done with you guys. Just to have this line up better with the S&P itself, I went ahead and I changed it to the intermediate degree 3 and 4. That's the parentheses 3 and 4, working on the start of our wave 1 of parentheses 5 to top the entire move of that primary wave 5, more in line with the S&P itself. RSP is the equal weight version of the S&P. But I have here I do have an alt where I added this, I kept it as a green, more bullish alt, where we can get 5 waves up, but that is just completing the green 5 of the parentheses wave 3 and getting another fourth and a fifth wave to much higher than the 230s, similar to what we're looking at on the Dow. But the structure off the low really doesn't matter for our purposes. I'm going to go to a 30-minute here so that we can see everything in a little bit more detail. Based on, again, whether this does the same like we were looking at on the NASDAQ, it doesn't matter if this is a leading diagonal for the A wave or for wave 1 of the fifth. And just like on RSP, it doesn't matter if this is a leading diagonal for the for wave 1 of the parentheses 5, or if it's a leading diagonal for a smaller wave 1 of the green 5. We're still filling out the same leading diagonal structure at the smaller degree. We have a more muted C wave here inside the third, more muted based on its own fibs, but again, getting at the same 1382 fib extension for the third of the diagonal, so very high probability resistance zone, and does not, counts well as being complete, so can't rely on this smaller degree C wave pressing up to 100% extension when you have 5 waves to a smaller extension that's hitting a larger degree significant fib. So looking for a similar fourth wave that should be an ABC consolidation, and then that ABC up for the fifth. All right, that covers us on equities. Let's jump over and take a look at oil. There we go. So the structure that I've been following in oil, I think is similar to what Garrett and Arkady have been showing you, is that this was 5 waves up that completed in March. And from the low in April, we had a B wave bounce to a lower high and have been filling out an ending diagonal down for the C wave of this wider flat. Now, I'm not sure if this is all of that consolidation as an ABC or possibly just the A wave of a larger ABC. This, I think, looks a little bit more proportionate when I zoom out to the structure that we have off of the 2020 low. This is a little bit shallow to being only being all of the consolidation, but I'm certainly willing to give it the benefit of the doubt off of this low when it looks complete, which it does not look complete yet. It looks like we are just starting the C wave of the fifth. So again, this is a diagonal structure for the larger parentheses C wave, kind of the inverse of the diagonal that we're looking at on the S&P, but it's already in the fifth wave. So that means all of the subwaves are ABC moves. So we have an ABC for wave 1. We have an A, B, C, a little bit compressed for the C wave of 3. We have a flat, which might actually count better as a WXY, but we can get 1, 2, 3, 4, 5 for that C wave. So we have an ABC for the fourth, and now we're working on an ABC structure for the fifth wave. The 100% extension is nominally lower than the third got, so possible that this spikes down and gets more extension for that C wave of 5. This might be just a wave 1, get a little bounce as wave 2, and then 3, 4, 5 down for the C wave, trying to get closer to that 81.25. That might be a little bit more indicative of this being all of the intermediate ABC correction and not just an A wave. But when you have structure where it looks clearly like a large ABC, and particularly when that C wave is filling out as a diagonal, even if you're going to lean more to only getting a B wave bounce from there, it is worthwhile to plan to trade off of the end of that diagonal for at least an initial sharp reversal, because we know that the initial moves that come out of diagonals are pretty sharp and violent. So when we see 5 waves down completing this C wave and start seeing other technical indicators, the divergence that we look for at different time frames on the MACD, other stochastics and RSI lining up, as well as other fundamental things that Lynn and others might be showing us, that's going to be a really good opportunity to play the long side. It doesn't have to be super reliant on it being a long-term sustained move. You're just playing for a strong reversal in a bounce at that point. But in the meantime, Garrett and I are seeing a lot of the oil and gas names, and we'll take a look at gas. We don't usually do that. But rather than looking at XLE and XOP, because those are kind of special to stock waves, a lot of those are looking more similar to the structure in UGA, which is the gasoline ETF, of being in a fourth wave, but just trying to start the potential C wave down of that fourth, targeting some more significant lows from moves down off of the June high. Next, looking at natural gas. Oh, look at that. Let me switch to it. So natural gas, we got a nominal higher high over this fifth wave up. So maybe this fifth wave is not a primary degree C wave, but natural gas to me looks very clearly like 5 waves up here as a diagonal. So maybe it's going to get an extension of that diagonal, but I don't see that as reliable. And maybe it's not a C wave up as a larger A, B, and C complete and is not long-term bearish. But until it fills out at least more of a wider flat here, I have a very hard time being bullish. So if it's a trade that goes on without me, so be it. I don't have a very clear structure. This looks like an ABC up as a B wave to me, at least setting up a wider flat. And maybe this is not as bearish as being a significant primary degree C wave top. Maybe this is 5 waves up as something more bullish, and this is going to be part of the corrective retrace. But again, even filling out this ABC here, this might be just a larger A wave and need another B wave and C wave consolidation before it looks like a more proportionate consolidation after 5 waves up of this magnitude. So this doesn't look like quite enough. I would really want to see more like an A, B, C like this for this to be more reliably long-term bullish. Because we know that after a diagonal, even if it's a bullish diagonal, we got that initial sharp violent drop from the completion. It got a sharp violent bounce that tried to make a nominal higher high, and maybe actually did, depending on which contract you're looking at. But we know that after a diagonal, especially if it's a leading diagonal, something bullish, that your retrace is going to be wider and or deeper than just a regular ABC. So that's why I'd be looking for something more like this if it was going to be long-term bullish from there. All right, we did natural gas. Let's move on to the metals. Starting with gold, I want to go to the big macro clean tab and go out to the daily there. So we are looking at gold starting a primary degree wave 5 off of this very, very big expanded flat for the primary degree wave 4. So we're looking for a 5 wave move up, 1, 2, 3, 4, 5, targeting the 2300s or maybe even getting more extension past that towards 2500. But we're working on just the first move off of that low. So within the structure that we're looking for a wave 1 off of the low, we are already at a resistance region where we would expect to possibly top as wave 1 of that wave 1. If we get a 5th wave up a little bit higher, a 4th and a 5th wave up higher for this wave 1, it really probably is going to move this up higher and this up higher and this up higher. And then that stretches the rest of the primary degree wave 5 even more, which is not a bad thing. So we're still certainly going to be on the lookout for that. But one of the other things that I am on the lookout for is that rather than this succeeding and getting 5 waves up, it's possible that this was A, B, C up for a blue wave 1, and that this is consolidating as a blue wave 2, and the larger intermediate degree wave 1 is going to fill out as 1, 2, 3, 4, 5 as a leading diagonal, running behind our market, but similar to what we're filling out in our market. So that should, if that's the case, we should get a deeper retrace as the wave 2. But right now we are holding support for a possible wave 4. Silver, that we'll look at in just a second, ideally should already be all of its wave 4 right here at the low today. And getting a 5th wave up. So maybe silver gets a more extended 5th wave and this holds a little bit more muted, just, 1800s to 1810 to 1820 would be enough to satisfy 5 waves up. And then we could get a more normal wave 2, or maybe a little bit deeper wave 2, and not have to worry so much about it making that parentheses wave 1 too big. But again, those are problems for another day. Right now we have 3 waves up so far. We're looking for this to hold as a 4th and get a 5th wave up and then hold as a wave 2. Or if it's not going to hold as a 4, then we can give that the benefit of the doubt as ABC up and holding a wave 2 in that leading diagonal. So now looking at silver. Silver gave us a little bit better subwave structure and giving us a little bit more detail off of the low. Had this 5 waves up start and a deep retrace, and another 5 waves up start and a deep retrace, and then made up for the deep retraces with a very nice extended 3 and 3 inside of 5 waves up for wave 1. It looks great as an expanded flat here for the 4th wave. Actually, that didn't make a higher high, so just a regular flat. But holding a nice just above the 382. So I would like to see this be the start of maybe an ending diagonal for the 5th wave of wave 1. It could get more of a B wave and a C wave down to the 1950s as more of a flat in line with the potential that we're looking at on gold. But really holding 1980 now and getting a move up towards 21s would be ideal for silver. Copper, we'll look at that before we look at GDX and moving on from there. Copper looks great as a 4th wave, deeper than ideal, but it certainly held within the parameters for the 4th wave inside a larger primary wave 3. And so far we have 3 waves up, holding a 4th wave, want to get a 5th wave up and then hold a wave 2 retrace. And that'll be the 1-2 start to wave 1 of our larger 5th wave. 5th wave of primary wave 3, which ideally takes us towards 717 based on the larger Fibonacci pinball. Now looking at GDX, what is, I think it's the macro clean tab. This one. Yep, there we go. So GDX, we're looking at this intermediate degree A and B structure setting up for a C wave of primary wave 3 and a much, much larger degree diagonal. We have to count this intermediate degree B wave. It did come very close to a 618 retrace, but we have to count it as a WXY. It has gone on very, very long in proportion to the initial move up off the March 2020 lows. And a WXY structure is not always the most reliable, but it does fit very well. And we have a lot of individual names that Garrett and I look at in the metals, miners, and agriculture service that fit this wave structure. We do not have confirmation of a bottom yet, but do have a possible 5 waves up off of this low and are holding a nominally higher low so far as a small wave 1 and wave 2 inside of what can be wave 1 of the larger wave 1 of that parentheses C. We are not out of the woods, though, for this being an alternate of the parentheses 3 and a flat for the parentheses 4, and trying to get down to the 2390s or maybe spiking below that as a final drop, even counting this as the ABC for the Y wave. But ideally, we're going to hold the recent low from July 25 and get more of a larger 5 waves up for wave 1 of our wave 1. Now let's take a look at bonds. Ideally, our 30-year Treasury is working on the 5th wave up, as this is 3 waves up here. I'll go ahead and add the subwaves. We were treating this chart looking at just the pirate ninja potentials. So those are whenever we have unclear larger structure, but we see a clear corrective consolidation, then it sets up for a measured move. So we had the potential for a more significant bottom to form in treasuries here in June. We only got 3 waves up off the low, but we held a pretty decent corrective consolidation after that 3 waves up to a higher low. So drew a support line, drew a blue arrow for a possible pirate ninja. We filled out, got to an exact measured move for the most part, then faded down. That gave us another possible A and B wave, or setup for a purple pirate ninja, and we got that just past a measured move and then faded down from there. That setup we were allowing at the time for maybe getting a wider flat consolidation. That gave us the potential for a measured move. We're trying to get 5 waves up for that measured move now. Now, in terms of what this looks like on a larger degree chart, we are at risk of this completing just the A wave of a bigger corrective bounce, or when we look at TLT or the ZN chart, which is TY is the way my data provider codes it, this could be a 4th wave. So where this is an A, B, and a 4th wave of getting one more low for the C wave, and we'll look at that here, the TY chart. So it's a little bit weaker also, but this could be a 4th and trying to set up for a 5th wave down. But what I'm going to be looking for is, US, is after this completes into the 148, 149 resistance as another A, B, and C wave up. Go ahead and add that. That's now in green. For the green pirate ninja. So we'll be looking for another corrective consolidation, maybe to hold the 139 region, and then set up again as the larger possible measured move from any consolidation there. But this does not look like it is the 3rd of a diagonal. This looks more clearly like it's an A, B, and a C wave up. That doesn't mean that it can't be the start of something much more bullish longer term. But even if this is the start of something more bullish longer term in the 30-year Treasury, that should be an A, B, C move up for an A wave, and then a bigger B wave and C wave up for a larger cycle degree wave 5. So we would be looking for a consolidation and then another move up. Even in the more bullish count, we're treating this as an A wave. And then looking at TLT, nope, not that one. Let's go to this one. TLT is similar to the risk that we're looking at on the ZN chart, that TY, can count the same subwave structure as what we're looking at on US, where this is an A, B, and we need a 5th wave of the C wave. I made it yellow here because I think there's a little bit greater risk that that is a 4th, and it's going to try and drop in a 5th wave. But if we hold a corrective consolidation from that higher high into the 15 region, then that sets up for a bullish move from there, and this bottomed as a Y wave instead of getting a 5th wave down of a C wave. And then lastly, I think we can take a look at dollar. Decent move off of a spike high. There was a lot of confluence for that to have just been an extension of this possible C wave up of a primary wave 5 in a larger diagonal. But I'm going to wait for more confirmation before I try and snap this to mark a major top yet. So easily just extension of this C wave, but don't have enough of clarity off of that high yet to say that this is definitively the start of something very, very bearish. Certainly can't for the dollar. Certainly can be, but so far this is only 3 waves down. Maybe it's 1, 2, A, B of a third, but this looks a little bit more bullish here. This looks like 5 waves up off of the 104.84 low. So maybe consolidates back to 105.40s and then tries to get at least a measured move up towards 107.50 to 108 again. Anything else that I'm missing? I know we started a little bit late, but we can go ahead and try and end closer to on time, and I'll get this uploaded for you guys, and we'll see you next time. All right, with that, we'll go ahead and shut it down. Have a great day.